Good afternoon, everyone. Very welcome to this final panel discussion on early inroads for private equity and venture capital. My name is Axel Hellman. I'm a foreign policy analyst and a political risk advisor, mainly focusing on emerging markets. As Esfanjar mentioned, over the last year or so, I've taken a very great interest in Central Asia. And this summer, I had the opportunity to travel to Uzbekistan and see for myself some of the developments that are currently taking place there. It was a fascinating opportunity. And I'm also very glad to see some familiar faces from the trip here in London. The way I see it, there are really two stories to the development of Uzbekistan. On the one hand, we have the opportunities that come from the sweeping privatizations programs of state-owned enterprises in key sectors such as mining, gas, and chemicals. And on the other hand, we also see a number of emerging opportunities as a result of new consumer demand from a new, young middle class gathered in the city centers. And I think that today we've been giving a very good overview of those two stories. We've heard about the potential, we've heard about some of the challenges, and we've heard about the reforms that are currently taking place and how that is affecting the private sector. And one of the things that stood out to me is what Louis Skyner from Dentons mentioned earlier today, which is the challenge of converting the international interest in Uzbekistan's debt into an interest in equity. And I think that we have a really good panel now to address that challenge. So it's my great pleasure to introduce the panel. We have first Kian Sandier, who's the CEO of Sturgeon Capital, Aziz Nuritinov, who's the founder and CEO of Eman, and to my left we have Felix von Schubert, who is the CEO of Infrontier. And I'm going to give you all an opportunity to introduce yourself and your businesses. But I thought to really kick off the discussion, I'll start with turning to you, Felix, because Infrontier has a very broad experience from dealing in emerging or frontier markets. So could you talk to us a little bit about, from your point of view, what makes Uzbekistan such an interesting investment opportunity? Are there any key sectors that you are looking at and sort of key developments that you and your colleagues are focusing on at the moment?
Sure. Look, great pleasure to be here. Many thanks. Infrontier, as the name suggests, focuses on frontier markets. We started 7 years ago to invest in a neighboring country of Uzbekistan, in Afghanistan, where we are to this day the only commercial investor in town. And I'll spend 30 seconds, if you allow, giving you a bit of background on what we're doing there, because I think it's probably relevant for what we're looking to do in Uzbekistan. So Afghanistan obviously is a very different scenario to Uzbekistan. It's a much poorer country. GDP is about half that of Uzbekistan, but same number of people. But what is interesting from a governance point of view and from a reform point of view, in many areas it has a real head start because it started much earlier implementing some of those regulatory frameworks that an international investor requires. So our strategy in Afghanistan is very simple. We invest in a multitude of sectors and always into the market leader to really see how we can shape that market leader into something much bigger and, very importantly, very quickly becoming a regional player. So we own the largest insurance company in Afghanistan. We own the largest retail chain, the largest pharmacy chain. We are invested in a large tech company, agri-processing, and other sectors. And 2 out of our companies have now started being active in Uzbekistan from Afghanistan. One of our companies has now got clients in parts of Africa run out of Afghanistan. So we're seeing the opportunity for companies that are private equity backed, not just to become better at governance, become better at systems, more efficient, faster, better management, but, and that's I think a really important point, the opportunity to grow regionally. And that's very much what we're trying to focus on when we're looking at Uzbekistan. Our activities in Uzbekistan are much younger. We only started about a year and a half ago, where we have a dedicated local team based in Tashkent. We have not done an investment yet, but we are actively working with a number of companies looking to see if and when we can invest. Our strategy is usually to really get to know the market and get to know the sectors. and for companies to get to know us, our way of working. We're very hands-on, very direct investor. We say very quickly what we're looking for and what we don't like. And that's why we have built up a local team in Tashkent to really work with the companies. But again, in summary, we're looking for opportunities that can grow regionally. And that, I think, in the case of Uzbekistan, are sectors such as healthcare, financial services, and agri-processing, which are probably the three key areas we're focusing on initially.
Thank you, Felix. You touched on two things that I think are going to be really important here, which is the regional aspect and the suitability of a private equity structure. So, Kian, if I may turn to you to kind of elaborate on that. Why do you think that the private equity investments are also suitable for the Uzbek market, and how do kind of your portfolio fit into that?
Sure. So we come from a bit of a different perspective. For about 15 years, we've done nothing else but invest in Central Asia. So when you put that into context, Uzbekistan for us was always kind of the elephant in the room. It was a country with the largest population in the region. It's already been discussed, but a great demographic, 65% under the age of 35, diverse economy, etc., etc. We've actually been investing there on a small level for about 8 years, but that was more to just get a feel of the developments and what was actually happening there. And it was, under the previous administration, it was very difficult to invest for reasons kind of widely known. And what we define as kind of the fall of the Berlin Wall moment was when there was the currency liberalization, which has been touched on briefly today, but I don't think the importance of it has kind of truly been understood. Prior to that, you had two different exchange rates. One was a subsidized rate, a free market one. And there was, if you were involved in business, the incentive was to basically utilize the spread between the two. And that liberalization signaled two things. One was that the country had opened up to foreign investment, but two, it was spending political capital by the new president to signify the seriousness of his reforms. And from there, we then started working towards actually looking towards putting a fund together to actually deploy meaningful capital to Uzbekistan. And I think we're launching a private equity fund dedicated to Uzbekistan in about 2 weeks, which, if I'm not wrong, will be the first private equity fund actually investing in the country. And as to your question as to why private equity, it's more a function of where the country is in its development in terms of the investment market and where the opportunity set is. So normally you would see a public market which is attractive kind of late on in the economic development stage, where you have a good mix of both private and state companies. If you look at the makeup of the market today, the public market, as I'm saying, predominantly they're state companies, and liquidity is quite low. It's about $50,000 to $100,000 a day, let's say. Now, the good thing is, as you've seen in the presentation today, that's a fluid dynamic and will soon change. But that also plays into private equity. Our general policy is that we only invest in companies which are truly privately owned. The reason being, you have incentives of management which are aligned with minority shareholders. You have a more diverse range of industries which you can choose from. And this way you have true potential scalability. Now, the beauty that falls in parallel with the public market development is that the life of our fund, let's say, is 5 to 7 years. We hope and we believe that by that time the public markets will have developed. And at that point, the public market locally could actually be an option for us to exit these investments that we're making.
Thank you. So, Aziz, I'm going to turn to you, and it would be very interesting to hear from your perspective as an entrepreneur. First of you, how you see sort of the environment that you're operating in. And also, I think what would be interested to hear is some of your objectives. And when you speak to other entrepreneurs in Uzbekistan, looking ahead in the short term, but also perhaps a few years down the line, what kind of objectives are you and many of your peers pursuing in terms of, is it increasing kind of your operations in Uzbekistan? Is it reaching out to foreign markets? And what would you like to see from investors and other partners to kind of help you get to that place?
Thank you. Good afternoon, ladies and gentlemen. It's an honor for me to represent the real sector of Uzbekistan, such as furniture and woodworking industry. And my company exists from 1995 in this industry. And a long time we worked in a closed economy, we felt very free ourselves, I mean the producers. But this period gave us time to get some earn money, to be more compatible with the big companies from foreign countries. And after these new reforms, our company is opened to the world, and now we felt real competition. And that's really nice because now we can show our potential. We can use more technology from the abroad. So now our situation, that's producers, they try to use quality standards of the world. They want to make some IT implementers like CRM system or ERP system, but in last they didn't use it. So from the investors, I think we need to have a base for raw materials and the components to produce to be more compatible with import. We already always put the example Turkey. They also don't have any. They don't have wood or other raw materials, but they produce very well the furniture and export well. So we have also very good chance to be the supplier, one of the main supplier in CIS for furniture and the woodworking industry, like textile or agriculture. So that's why we, group of the producers, we organized the association of the woodworkers and make one brand and to promote this brand and for export also. Last week we participated in the Mebel Expo in Moscow, and our government really support us with this export idea. The agency of promotion export, they paid all costs about this exhibition, and we're going to implement the ISO standards, and we're working with EBRD. Already, my company already got some support to use some optimization of the production. So we're trying to be. We feel that now there is a real competition, and we should be ready to be. Yeah.
Kian, you spoke of what you call the sort of fall of the Berlin Wall moment, and I think it's safe to say, as we're sitting here, that there really is substantial momentum building up in Uzbekistan and a great interest from investors. And you spoke a little bit about the reforms that ultimately convinced you and your partners to take that step into the market. Are there any substantial obstacles that you see that remain in place, or maybe to put it another way, what would your kind of wish list be from a policy perspective in terms of helping you grow your opportunities in Uzbekistan?
Yeah, so the way I see that, it's kind of a double-edged sword. So if everything was easy, if everything was presentable, if everything was easy to do, then me and our company wouldn't exist. So what would be ideal, obviously, is if you have an abundance of investment opportunities and the information that comes with it is transparent and there's enough for you to make a decision upon. That's not there at the moment, but that doesn't necessarily exist anywhere in the world, so that's where we really have to come in and do our work. There are small obstacles from a legal perspective. So, for example, if you're investing in an early stage business, we were discussing it earlier, there's limitations on the LLC laws at the moment where, for example, if we were to invest in a company that today is valued at $1 million, we were to invest $1 million, you would basically become the whole shareholder. It hasn't adjusted for kind of the laws necessary to make venture investments. But we're actively speaking to the government to adjust that. Beyond that, there aren't significant obstacles. As Michael mentioned from Zudmo earlier, one way to kind of ease the way you operate in a country is to have a strong local partner. The way we've tackled that is to build up a local team. So we've been lucky in that we've got a fairly senior individual that's previously working at a semi-sovereign fund, let's say, in Uzbekistan, deploying capital there, who has experience, who has a track record, and that has significantly helped us operate in the country. So it's always important to have a strong operating partner and to be in constant dialogue with both the public and private sector so that you smooth the path for yourself and then hopefully for other investors to come in as well.
I mean, just based on my meetings there are these really interesting opportunities, and we met a lot of really interesting companies, a new generation of entrepreneurs who are really trying to meet that new demand. So, Felix, perhaps if you want, can you talk a little bit about them, how, in your view, the broader ecosystem for entrepreneurs and investment looks like in Uzbekistan?
Look, it's a very, very young market, let's be clear. As you rightly said, there is no internationally focused fund operating today. I mean, we're all just starting. And therefore, companies are not used to the type of questions, to the type of due diligence, to the processes that any of us would have to go through. And that takes time. It takes time to educate, takes time to build confidence on both sides to really work together. The way we've done it in the past is really spend time with companies, support companies with introductions, with ideas, before you eventually invest. But it's really that upfront investment, free of charge, obviously, that's the tricky part. You have to really spend time, and you have to be very, very patient to get there. So, yes, there's an ecosystem in terms of, there are good law firms, some of them represented here who can help. There are accounting firms, there are banks, all of that is there. But the experience level, the confidence that private equity actually is a route to support and finance growth, that's just still very, very young.
Aziz, I'll turn to you, but obviously, Kian and Felix, feel free to weigh in on this as well. I mean, my sense, meeting with some of the entrepreneurs, that in many cases, the return rate on investment was very good, but overall, the revenue, if you will, was still quite low. So my question is, in that environment, how do you scale a business and take it to the next level? Aziz, if you want to start, or Kian.
Sure. The way we're tackling that is, you're absolutely right. So you look at investments on an absolute perspective, and let's say the rate of return is quite high, but in terms of the absolute amount you're deploying is on a relative basis low. One way we're trying to solve that is effectively create an ecosystem. So you have two angles which we're trying to pursue. One is the banking angle, and the second is more digital businesses. And on the digital businesses, effectively, the core thesis there is that you're providing a service which in itself is profitable. The provision of that service generates, let's say, data with that, or specifically credit data, which no one really has. And you can then link that data to potentially the bank to extend loans, right? And if you put that all together, ultimately the end game will be a large business, let's say. Now the key there is obviously execution, but you have the backup option that these businesses in itself are profitable very quickly. The beauty of Uzbekistan is it's not like, let's say, European venture investing where you have to spend millions and millions to get to break even. The break-even points are much earlier. Why? Because operating costs are lower, labor costs are lower, and you don't really have any competition. So if you look at fintech specifically, for example, you have billions even flowing into companies here, and there's no sight of profitability. Whereas you have many case studies in countries like Georgia, Russia, Kazakhstan, where they've been pretty successful, and the money needed to get to that point has been a fraction of what is needed, let's say, in the developed market.
Would anyone else want to weigh in on that before we open up for?
maybe just the one point I mentioned earlier, we think the regional aspect is really important. Uzbekistan is a big country, but maybe not big enough to really grow a company to a successful stage where you can get an international, not just a regional acquirer. And we're all about exit at the end of the day. Yes, there might be an IPO route, but more likely it's going to be an exit route through an international acquirer who wants to get into the market. So building that scale and building scale potentially through regional integration, we think is quite relevant.
Right. We'll have time for some questions. If there are any, we'll take a couple at a time. No questions for now?
Axel, I have a question.
Yeah, I knew you would have a question.
It's my prerogative. I can ask a question. So I'm curious also about a little bit about the competition dynamic. So there, it is not, we're in a good position because there's not simply one firm or fund moving into the market. And one of the things that I've heard sort of described is that there are many suitors and sort of few brides or husbands in this case. How is it how are you approaching that basically? Are you trying to take a more sector-specific focus based maybe on your background or experience so that, you're dividing up the opportunities between potential competitors? Or is it that there is actually some direct competition between these sorts of entities? Because one of the things that will obviously impact the decision-making of the targets, the investment targets in Uzbekistan, is how many people are knocking on the door, or the impression of how many people are knocking on their door.
I'll take a first stab at it. No, it's a very good question. The benefit you have today is obviously it's really a nascent stage in terms of let's say international firms formally in terms of financial investors investing in the country. Now, the way we see it is that we would actually really like competition. It makes our job easier because when we're speaking to investors, we're not these crazy people just speaking about Uzbekistan. There's other people that are speaking to them about it as well. And the risk is actually there is such an abundance of opportunity that you spread yourself thin and you have no focus. So what we've tried to do is work from a first principles basis and see what has worked for us in the past, what has been good case studies of other countries, and then try and match that with what the opportunity set is in the country as well. And it's how we've come to our kind of the strategy that we have. But I would more than welcome competition, and I actually hope it happens. In a way, it formalizes investee companies' approach when they speak to you, because it instills discipline into them, and on their side, they're competing for investment as well. And if they don't, without sounding harsh, get their act together, not saying that they haven't already, then they won't be getting that capital. So it creates dual competition on both sides, which I think is positive for everyone.
I think one point to add, obviously companies can go to very different sources for capital. They can go to a local bank, they can go to the couple of international banks moving in, they can go to DFIs. DFIs are probably the most active investor today in Uzbekistan, let's not forget that. And they can go to the few international funds or other local funds that are now active. What we've seen in other markets is that from the sort of non-DFI investors, the commercial investors like ours will very quickly choose either slightly more earlier stage or slightly more later stage. And actually it becomes quite complementary because certain investors prefer more the early stage, others prefer more the later stage. And you end up working very well together because okay, they like this sector and they like this stage, and somebody else like another sector and another stage. And you can suddenly really work well together and almost sort of co-invest, but in stages into those companies.
Just, sorry, one more point to add to that. Let's say you get to a stage in a few years' time where capital or investment is commoditized in a sense that it's widely available for these companies. What then becomes your competitive edge or fact is the intangible that you can bring. Whether that's management quality you can bring, it's distribution regionally, as Felix mentioned. And that's where you really have to do some work to have a competitive difference. And ultimately, a competitive difference plays in your favor, because if you don't have that, you won't be successful in any case in the investments that you make.
Any further questions? In that case, please join me in thanking our panelists for a